Good morning, good afternoon, good evening, wherever you are. Thank you for joining us for today's public webinar. Good morning, Jim.
Good morning. We're going to do a very short commercial. The reason we do these free seminars, which is to continue focus on what our educational efforts are. So Jen, if you'll kind of walk through the upcoming courses,
Yes.
and then we'll go to some very interesting things on the market.
Okay, great. So our next live course, which is running from August 2nd to 10th, is the Live Market Profile Primer. For those of you that are new, just wanted to let you know where you find our course offerings on our website, jimdeltontrading.com. Oh, one other thing that I don't think I go over enough for folks that are new is where to find, our official YouTube channel, because we release a week ahead video every weekend. Our Twitter, our official Twitter, there's a lot of fakes out there. Please be careful with regards to solicitations. We do not solicit.
And when do we change from the bird to an X?
This is Twitter, so
I
don't know. I didn't change it yet.
No.
Sorry. It's old. And then just go to courses at the top navigation of our website. The primer, which is an 8-day course, you can click on the schedule here so that you can download it. The times are posted in Eastern, but this is just so that you know what the schedule is for that live class. It is a live class that runs for 8 days, and all of the live webinars are recorded in case you're a person that can't attend everything because of your day job, or because you live in a time zone where it's not conducive to be attending all of the webinars live. We do have a lot of international clients who are not able to attend, or like I said, folks with day jobs that may not be as flexible, so they can't attend all of the webinars live. Completely understandable. When you purchase a primer from us, you will get access to the materials of that primer for 3 months after the course finishes, so that you have enough time to go back and review. But if you've got any questions about our offerings, by all means, go to our website. At the bottom there, you'll find our phone number, and then our email, dalton@jimdeltontrading.com. But we will revisit this again later. Just wanted to do it as a quick thing so that newer folks know where they can find this information. And somebody here just was saying the primer I attended was great and worth the money. Thank you to the person who just stated that. Thank you. Okay,
Thank you.
Jim. Shall I give you the screen?
Please.
Okay. There you go.
Okay, before I show you the first thing I find of interest this morning, Jen mentioned the primer. In the fall, we will have an announcement shortly of the intensive, which is our big course coming up. There is a prerequisite to that course. Unless you've attended an intensive in the past, the prerequisite is the foundational e-course. The primer is not a prerequisite for that. All right. The first thing I want to show you, the first thing I want to say is that, and I've said it many times, traders, particularly short-term traders, do what works until it doesn't work anymore. The first time I ever heard somebody say that was a very senior trader, and I just kind of looked at him, and I've followed that over the years, and it is absolutely one of the best pieces of information ever. I'm going to start off, and the first thing we're looking at here is the daily bar chart. What has been going on here for several days, short-term traders when the market opens in the morning have been buying exactly on the trend line. This is usually an indication, when it's this exacting, that's usually an indication of short-term traders, and it is usually an indication of the laggard or the late short-term traders wanting this exactness. Notice this trend line. What I find interesting, it starts at 45.21, and the trend ends at 45.83, 45.83. Okay, now let's take just a fast look at the current market. There is 45.83 right there. So here we are coming into the opening. We've got about 20 minutes until the market opens, and the market is right at the same place once again. So like I say, traders do what works and does it doesn't until it doesn't work anymore. So this morning you've got my guess is, and everything we do is of course always a guess, but my guess is that you're either going to get the same thing, or if you trade below that trend line, you may get some liquidation. There may be an awful lot of stops right along that line. But just as a fast review, I mean, it is amazing sometimes how we outthink ourselves when markets can be, relatively simple, and we outthink ourselves. Say, well, it can't be this time. Well, that's exactly what it's done now. And there is no real excess on the highs up here. So all we've really had is short-term traders here for several days. We come back, take a look at the market, and you see that's exactly where we are with about 20 minutes to go. I don't have much more to say about the markets other than that. I mean, we all know, you've got the two big announcements. You got the FOMC announcement this afternoon. And of course, that is in two parts. You get the actual announcement itself, and then you get the chairman's conference. The next big item, of course, is we get PCE on Friday. They showed a chart, I think, on CNN that the response, the market after the chairman's conference overall is up like 0.1%. So it hasn't, there hasn't been some of the volatility that we've had historically. Anyhow, you see the market bouncing off of, that level. I don't have much more to say about the market right in here. I mean, that's what the market's been doing. And it either works or it doesn't work. If it doesn't work, you probably get the market to the downside, and you get a lot of stops underneath that. Okay, but the real thing I want to talk about, and Jen has added this book to our reading list. Jen, you want to the book Emotional Intelligence? You want to show on our website where the reading list is and where this book is we're going to talk about?
Yep, good idea. 1 second, let me take back this screen real quick so that I can, that way y'all know where to find it if that's something that you're interested in. Okay, can you see my screen?
Yes.
Okay, so you go to our website, jimdallantrading.com, go to resources at the top navigation, you'll see a submenu pop up and you go to books. And the book that Jim is discussing right now is this one right here. So the first row after his books on the fourth column here, right here.
Okay, thank you. And when I talked about the intensive coming up, we do 2 book reviews on each intensive, and they're usually further in the intensive. The intensive this year, the one coming up in the fall, the first thing we're going to do is talk about this book. And I'm going to just give you some highlights here of the reason why I think this is so relevant. So many times, we can go back to the screen if you want, Jen.
Okay, let me give you the screen back. 1 second.
Thank you.
There you go.
So many times traders, and understand that the success ratio of short-term traders is extremely small. And if we do an educational program and we talk about, some specific thing, whether it be the 45-degree line or, some specific little thing that people think that's going to be the secret ingredient, we will overwhelm the attendance. When we talk about something that's more esoteric, like emotional intelligence, the turnout will be really low, because it's not a quick fix. What most people want is the quick fix idea that's going to make them whole. And some of the highlights, and like I say, I've watched this for so many years, and feelings are as important as thought. There's one study I saw in the book, which I found very interesting. And on the surface, it doesn't have anything to do with trading, but they were talking about, the CEOs of companies. The majority of them are hired based on their intelligence and their intellect. The majority are fired because of their lack of emotional intelligence. There's another one in there that says, that about intelligence or intellect only accounts for about 20% of success. Now, I'm not sure, I don't have that much faith in all these studies other than the concepts, but it comes back to feelings are as important as thought. Intelligence counts for nothing when your emotions take over. How many times have we been there? We knew what to do and our emotions get involved and we do the wrong thing. And particularly when you're talking about, you're leveraged. You have most short-term traders have a tendency to be somewhat undercapitalized. When you're undercapitalized, you feel more emotional stress. You feel more emotional stress. There is less chance that you're going to do the right thing. But one of the points in the book that intelligence or market understanding counts for nothing when emotions take over. You go back and think about evolutionary biology. The automatic reactions, they're etched into our minds. We've heard so many times the thing, fight or flight. In the earlier times, this is what made the difference between life and death. These reflexes were built into our systems many years ago. And yes, we can mute them as time goes on, and we can do things to have more control, but they don't go away. For example, walking down the street, you just automatically, there's a tree branch. As you're walking down the street, you just automatically walk under the branch without hitting your head on it. That is an automatic reaction that you have. How many times, think about you're with your partner. Then we'll relate this to trading. One of the things that I always say, when you get in a heated moment with your partner, and that there's certain things that you say that you shouldn't say because they're always going to give you exactly the results that you don't want. You know that. And then all of a sudden, in the heat of the moment, you spit it out. It comes out automatically. And guess what? It has exactly the negative effects that you knew it would have, and the argument deteriorates. Another way to state this is passion overrides reasons all too often. And here we may have been talking about passion in a relationship, but there's passion gets involved in the market. And this passion too often overrides what we're talking about. I get questions all the time. Things like, well, Jim, I have a tendency to, I don't let my profits run. How do I change that? Well, my standard answer is, it's a habit. And once you do it once, you do it twice, and all of a sudden it becomes a habit. It's like smoking or drinking or dope or something like that. You didn't start out to be an alcoholic or a smoker or a drug taker, but it's a habit that builds. So one of the books that we have that we talk about, and it's on our reading list, called Atomic Habits, and it's really addressing habits and how to break those habits. But also these feelings that when we do these things, they are built into our system. And as you said so many times, passion overrides reason all too often. So sometimes we can't control ourselves. The more intense the feelings exercised by the emotional mind, the more difficult it is. Another way to say this, we are of two minds. There is an intellectual mind and there's an emotional mind. And the emotional mind is every bit as important. And like I say, if we do a program to talk about emotions, people go ho-hum, they don't want that because it's not the quick fix. Market generated information works best when it's supported by the emotional mind. So we'll come back to the market. I won't beat this to death other than this is the book, The Emotional Mind, is the first book that we're going to use when we talk about, when we enter into the intensive. You don't have to be, coming into the intensive to read this book, but I would say it is just an excellent read. And sometimes people have a tendency to, you can go to Chat GPT, and you can say, give me a synopsis of the book, and it'll give you, a page and a quarter synopsis with all the main points in the book. And so, okay, I got that. Believe me, that is a total waste of time. You have to read the book and the details, and hearing the details and hearing the cases really solidifies it in your mind. I've read the book twice now. I first read the book, I don't know how many years ago, but Eric Jones, who wrote the co-authored, Eric, my son, and myself, wrote the first Mind Over Markets. And Eric reminded me the other day of how many years ago I first recommended this book. I just recently got done listening to it again on Audible, and it's amazing how much clearer it was this time because I've got so many more years of experience since that first reading, and it was probably 3 times more relevant to me this time as I could reflect on most of my serious mistakes that I make in the market are emotional. They're tied into your emotions, and you let your emotions override your thinking self. And remember, it is a combination of both. That is really, as we say, the formula for success. It's market understanding plus self-understanding. It's market understanding and self-understanding. It's that combination that makes you a successful trader. The majority of traders that we deal with will not spend the time to do that. All they want to know is, where do I buy? Where do I sell? Okay. I'm going to do it one more fast reminder of the market if you came in late, and then we're going to take some questions. So we started off and we put up the daily bar chart. This is the trend line. Traders have been buying exactly on that trend line for, let's say, for 8 of the last 9 sessions. I mean, almost to the tick. This trend line, we're there once again. The trend line extends from 45.21 to 45.83. We come back to the market this morning, and we're right at the 40, just above the 45.83. So we're right there again. Okay, Jen, let's take a couple of questions.
Okay, 1 second here. Let me scroll here. Okay, somebody's asking, I have noticed the amount of non-excess lows, prominent POCs missed, and very nuanced reference points holding for a long time during this recent market rally. With a market that has this many reference points to the downside that still remain, what does this typically mean going forward? How long can the market keep going in a certain direction without correcting these poor lows or wide unrevisited POCs?
Obviously there's no answer to that question. But this also brings back in, these poor lows, gaps, etc., they are market generated information. But as I have been saying to people recently, so is the trend and so is higher value every day. It's also market generated information. Now, what I think has taken place in this market, and we've been writing about this for some time, is what we call the pain trade. And the pain trade is simply as we say in the markets will do what causes the most pain for the greatest number of people. If you take a look, well over a year ago, everybody started talking about the recession. I think it came out and Jamie Dimon started talking about a coming recession. And, that became the standard. Everybody's talking about the recession and the rising of interest rates. Well, what if interest rates risen? They kicked them higher, 9 times or whatever? And here's the market, up near the highs for the last few years. Excuse me, I'm sorry. So what I think happened is particularly the long-term money managers bought into this idea of the recession, and they were underinvested or invested in assets that were too conservative. As the market started to go up, they were caught. They were caught underinvested. So remember, as I've explained before, if you and I are short, we have to cover the short. We know what a short is. The longer term money managers, if they're underinvested, they're in the same position that we're in at being short. They're not actually short, but being underinvested. If the market goes up, they underperform and they do poorer than their peer group. So what has happened is I think that they've been squeezed. And then, of course, the retail goes with momentum. The commodity traded advisors have a tendency to have programs that go with with momentum, and it continues to squeeze the long-term money. So this idea and what happens, you look at these things underneath the market, and it gives you a bias, and it makes it very difficult for you to be able to go with what's going on in the market right in front of you. This is a bias. This also, plays into what I'm talking about on emotional intelligence in here. So the question is, the answer is goes until it's over. And I don't know when that is, but I do know that it has hurt a lot of people because they're too focused on that rather than focus on what is going on in the market right in front of them right now today. Okay, another question.
Okay, let me see here. Somebody was asking, on the daily, is it considered trending up, or do you consider it 6-day balance?
No, I consider it trending up. I continue trending up. I mean, you're just, and you have really no excess at the high. So I mean, I don't see how you can see it any way other than trending up. I mean, just look at the market. I mean, it's a trend to the upside now. The question is this hold this morning? Do you look below this and fail, or do you hit stops and really start to show some downside? If the market does break the downside, the real support level is down at the 4,500 level. Okay, another question.
Okay. Do you consider the daily highs from July 19th and the 25th to be weak? If so, are odds higher that the market will take out the highs?
It's, there's stuff underneath the market that's bad. There's stuff at the high that there's no real clear excess on the high. So I'm just playing. I mean, right now, I'm playing it a day at a time on there. And like I say, right now, I'm playing on that trend line. That's what the market's looking at this morning. Okay, final question.
The NASDAQ seems to be weaker than the ES. Does that play any role in your analysis?
At one time, the NASDAQ was stronger. And then it was, I don't know if I see that much different. The NASDAQ made a high. I mean, it went crazy high following all the AI stuff, and it's backed off. But if you look yesterday and today, I mean, it was they were fairly relevant today, and they're fairly relevant in here this morning. All right, Jen, I'm going to stop at this point. If you have questions about the intensive or any of the educational programs, Jen's going to do a final commercial for those that want to stay around and ask questions. Jen, you want to take over?
Sure, no problem. So if you have any questions about the primer, our courses, or the upcoming intensive, by all means, type them in. As of right now, let me just go here so that the primer starting on August 2nd. For those of you who have already signed up, information was sent out yesterday. So if you did not see your emails yesterday, class information was sent out yesterday. But I just wanted to go over real quick about what the primer is, because I get questions all the time, and I just feel like sometimes it's easier to be able to answer questions for folks right away, like when we have the opportunity in a webinar and whatnot. But the primer is our least expensive course. It's super inexpensive. What I find is that people who have done the foundation e-course first usually come and take a primer with us, just to make sure they understand some of those first few the foundational concepts that we teach in the first few linear teaching portions of the foundation e-course. Or if you start off with the primer and you like what we do, then you usually continue on with the foundation e-course. But basically, the primer is a no-brainer for clients that are new and seeing what we have to offer, and they want to see Jim's approach, or how he evaluates the market. It's also a great course to review if you're somebody who has what you feel is a good understanding of the concepts taught in the linear portion of our foundation e-course. And then there are people who just want to come in mostly for the latter 4 days for Jim, because he's focused on the live market and narrating that and analyzing that, to show newer people how all the variables come together. But a lot of people who are more experienced enjoy that, so they like to come in for that latter 4 days and maybe just treat the first 4 days as kind of like a quick review for them, because it's so easy to forget some, like, a concept that you maybe hasn't been in the forefront of your mind. um, but the foundation e-course, a lot of times people ask me, what is the difference between the two courses? The foundation e-course obviously is much longer and covers much more than what we can cover in a primer. And it's also the prerequisite requirement for taking a live intensive with us. So if you are somebody who has heard about our live intensives, want to join us for that, you will need to make sure you do the foundation and application of the market profile e-course in order to be eligible to join us for that. We will be making the official announcement of the intensive very shortly. And at that time, we will be having bundled discounts for purchasing more than one course, meaning if you haven't done the foundation e-course yet, we will have a bundle that includes both the foundation e-course and the intensive, so you can get a discount for purchasing more than one course. And purchasing early always yields you the best price, just an FYI. So if you are looking for the information about the intensive, that will be released shortly once we make the announcement. Somebody's asking, will there be a bundle for the intensive and the advanced nuances e-course? Yes, there will be. So the bundles that we usually offer at the time are the foundation e-course with the intensive as one bundle, the intensive and the advanced nuances as a bundle, and then all three, meaning the foundation and application of the market profile e-course, the intensive, and the advanced nuances e-course as a bundle. Okay. Let me see here. Okay, somebody was just mentioning, and I thank this person again, saying that our courses are worth it for anyone who is serious about trading. Thank you for that. I appreciate it. Okay, so I think that's everything that we have for now. Like I said, if you have any questions on anything, you need some extra clarification, just shoot us an email, dalton@jimdaltontrading.com. You can give us a call. I'd be happy to answer questions with you if you got something more specific to discuss over the phone. This has been recorded, and we will get the recording posted shortly later. Thank you so much, everybody, and see you next time. Bye-bye.